How will all of these cues over the last 2 days impact the Indian markets? We have our research team joining in with how the trade setup looks like, the stocks to watch out for, and some important F&O cues to track in as well. Good morning, guys. Vivek, first up, what are the cues that you are picking up this morning? It was a mixed handover from Wall Street.
Good morning. You're right. So number one, given the fact that we now have to factor in 2 days of a handover, both Wednesday as well as Thursday, to account for, before we start today's trading session. First up, on Wednesday, like we mentioned, very weak handover from the US, but yesterday things cooled off a little bit. So now yesterday, what's actually happened is that Nasdaq closed at a fresh record high. So there is some positive cues coming in as far as our own markets are concerned. Now, oil prices on Thursday actually cooled off a little bit. WTI low by a little over 1.3% at the $85 a barrel mark. Now let's look at the Indian markets on how they ended on Wednesday and how they are likely to open today, given the handover that we've received. So first up, Wednesday Indian markets managed to go ahead and climb fresh record highs, and they managed to close to over there. Which were the ones that actually did well? Number one, the broader end of the market outperformed benchmark indices. 11 straight days of straight gains is what we saw. After that, a brief pause, and then once again, mid-cap and small-cap indices started rallying. Which are the sectors that did well? It was the usual suspects. Metals continued to rally quite well. Two fresh additions, in terms of sectors that rallied. Number one was the chemical pack. The entire pack did very well. And on the back of slightly cooling off as far as oil prices was concerned, you did see the entire OMC pack to do very well in the session. Market breadth, as expected, favored advances in the 5:4 ratio. Asian markets today are indicating a mixed start. GIFT Nifty, after factoring in both Thursday as well as Friday, is indicating a gap down start. But remember, some important cues today as well. Number one, TCS results, and number two, Bharti Hexacom IPO will list today, and all eyes will be on that as well.
A gap down start indeed. Thanks a lot, Vivek, for joining in. And over to Sudarshan now, who will list out the stocks to watch out for this morning. Good morning, Sudarshan. I'm sure Vodafone Idea is topping your charts today.
Morning, Horma. So, first up is Vodafone Idea. Company is looking to raise up to rupees 18,000 crore via FPO, that is follow on public offer, and it will open on April 18 and close on April 22. And for the same, capital raising committee will be meeting today to discuss the price band. Next is Sun Pharma. US FDA has classified Dadra unit inspection as official action indicated. That means regulatory action can be recommended now. Remember, this plant was issued 6 observations in the inspection that was done in December 2023. Next is Metropolis. It has given quarterly business update. Q4 revenue growth was up 10% year-on-year. Core business revenue was up 15% year-on-year. Even margin has increased due to increase in volume and price, and company says it has now become debt-free. Dr. Reddy's, it has launched drug-free migraine management device Nerivio in Germany and will launch in South Africa later this month, followed by launch in Spain and UK. Yonominda has secured land parcel in IMT Kharkhoda for greenfield alloy wheel plant and will be investing rupees 542 crore in 5 years. Phoenix Mills has given quarterly business update. Q4 total consumption was up 27% year-on-year, and gross retail collections were up 37% year-on-year. CAMS has received certificate of authorization to operate as an online payment aggregator from RBI. Tata Motors, its arm Tata Passenger Electric Mobility, has signed agreement with Shell to set up public charging stations for electric vehicles. Last is NTPC. Money Control has reported that NTPC Green has shortlisted investment bankers for its rupees 10,000 crore IPO.
Long list indeed. Thanks a lot, Sudarshan, for joining in. And lastly, Nigel, who was giving us a thumbs up at the start of the segment, is joining in with some important F&O cues. Nigel, I don't think the GIFT Nifty is reflecting your sentiments this morning.
Well, that's right. It's going to be a bit of a challenge for the bulls, but the bulls have been biting into these challenges. So I expect more of the same, actually. If you're going to start off 150 points lower, maybe it gives you a bit of an entry opportunity. And the line in the sand is going to be the 22,400 odd mark. The ones that's been the big outperformer has been the Nifty Bank. That's been outperforming. There was fresh long build-up even in Wednesday's trading session, and that will have to bat for the bull. So that's going to be the crucial index. What do the FIs do? Well, they added more longs. They added close to 40,000 long contracts. And if you pull up the net short positions, you'll just see that from being net short of around 25,000 contracts, that's moved into a net long now, 51,000 net long contracts, and that's the crucial one out there. Personally, I prefer, when the markets are net short, because that gives you a reason to see a bit of a short covering bounce. But if it's a market that's devoid of any kind of short positions, well, that's a bit of an issue for me. But the trend is still up, so we'll stick to that. What about the PCR? That as well is moving to the upper end of the range. The upper end of the range is around 1.6 odd. It's at around 1.32. So we'll have to keep an eye out on that mark as well. And it appears there's a bit of a strategy that's playing out in the near term. So the 22,700 put should come up for you on the screen. 22,700 call as well as put. Now, between them, on an average, the premium will be closer to 300 rupees. So someone who's writing this, which is known as a short straddle at around this 22,700 odd mark, they are playing for 300 points higher than 22,700 and 300 points lower. So that's the broad range that we're looking at. The 20 DMA, that becomes a bit of a reference point. So that's the number that comes up for you in the screen. But the stock that I'm looking at is Bandhan Bank. It comes out of the FNO band. So keep an eye out on that one. Let's see how this goes. Back to you guys.
Thanks a lot, Nigel, for joining in. Bandhan Bank, indeed, the stock to watch out for as it exits the band today. But time for